Welcome to the channel. Today, I'm going to show you 3 top utility dividend stock in Canada. And thank you for coming watching the channel. And let's go to the stocks we're talking about. Uh, at first, the number 3 stocks that I choose is Capital Power Corporations. Mm, So Corporations owns a general portfolio of natural gas, coal, winds, solar, and solid fuel energy assets, representing over 6,400 megawatts of generation capacity. The Alberta-based company has operation in US apart from Canada. It sells electricity and natural gas to industrial and commercial customers, government-owned entities, etc. Capital Power's market capitalization stand at 4.98 billion, with about 115 million outstanding shares. Its share price closes at 42.67 Canadian dollar on October 26th. The Capital Power stock rose about 46% in the last year, and it is presently ranked among the top performing utilities companies on the Toronto Stock Exchange. The dividend yield of the stock is currently 5.1%, with a dividend payout ratio of 130.5%. Meanwhile, the 5-year dividend growth rate is above 7% with an impressive dividend increase streak of 7 years. Capital Power generation net operating cash flow of Canadian dollar like 206 million in first quarter of 2021, as against 103 million in first quarter of 2020, which is a humongous increase in the cash flow. Its net worth was 101 million Canadian dollar in the latest quarter, while the total revenue were 554 million. Therefore, I would expect Capital Power Corporation to continue raising a dividend for years to come. Now coming to the second stocks I have chosen is Algonquin's Power and Utilities. So Algonquin Power Utilities is a diversified Canadian renewable energy and regulated utilities with asset across North America. So Algonquin actively invest in hydroelectrics, wind, solar power facilities, and other utilities, especially businesses in water, natural gas, and electricity. There is 2 operating subsidiaries for Algonquin. They are Liberty Power and Liberty Utilities. Algonquin Power owns 53 clean energy facilities and has a strong portfolio of wind, solar, and hydroelectric assets. The operation and under construction assets provide the company currently has 3 gigawatt of installed capacity. Algonquin Power's facilities are primarily located in USA, with 81% of its revenues coming from the USA. The company also gets 4% of its revenue from Canada and 15% of its revenue from other international locations. So I picked these stocks is as one of the best Canadian dividend stocks because renewable energy is becoming more and more prominent. I particularly like that Algonquin Power has been actively investing in renewable energy facilities and increasing its renewable capacity through active acquisitions. The dividend yield of this stock is currently 4.56%, with a dividend payout ratio of 44.6%. Meanwhile, the 5-year dividend growth rate is over 10%, with an impressive dividend increase streak of 10 years. Finally, we're going to see the last and the most one of the most used or most popular utility stocks in Canada are Fortis. I know this is a very popular stocks, but let's see how they work. So Fortis is a Canada-based electric and gas utilities holding company. The company's segments include regulated utilities and non-regulated utilities. So Fortis serves many different regions, including Arizona, British Columbia, Alberta, New York, Newfoundland, Ontario, uh, Ontario, Caribbean, and also like Prince Edward Island in Canada. So this is one of the stock which has like 47 year of dividend increase stakes. So why don't you want to these stocks in your portfolio? I'm sure Fortis is one of the few Canadian dividend paying stocks that can be called the Canadian dividend aristocrat. The dividend yield of 3.87% gives dividend investor a good starting yield. Over the years, Fortis has been able to maintain a consistent and sustainable cash flow. This is quite important in utility sectors. With the streak of over 4 decades of dividend increase, in addition to the attractive yield, Fortis dividend payments can be considered as bond-like. Since many Canadians must rely on natural gas or electricity to heat their home during winter, or use natural gases or electricity for cooking purposes, this makes Fortis as a very stable stock to own. The dividend yield of this stock is currently 3.87% with a dividend payout ratio of 75.3%, which is very, very good. Meanwhile, the 5-year dividend growth rate is over 5.5% with a remarkable dividend increase stake of 47 years. Fortis has come out and announced that the company is trying to reduce its carbon footprint and increase its exposure to renewable energy. This is proof that the management has sustainable future goal in mind. So considering all this, so these are my top threes. So if you want to support me, then you can subscribe the channel and like the videos. And also you can use the promo code which is given in the description to buy those stocks or add them in your portfolio in the Wealthsimple Trade. Thank you. Thank you for watching.